Yeah, I mean, look, the market has been largely momentum driven over the last few years. The switch has flipped clearly. Now we're in a value and quality tilted market in terms of factor exposures that would hopefully be driving excess returns over the next, 12, 24, 36 months. And of course, Berkshire Hathaway is known to be a value tilted strategy. So we've got Omaha for that. And now, so what QUSA is very simply, it's a quality tilted equity strategy. We use a very traditional, what's called a factor model. It's a fancy word for using financial metrics to identify what would be a quality security. There's 27 securities in the portfolio currently. That could go up. We can go up to 50. But right now it's a nice, more concentrated portfolio at 27. And we're using the exact same income overlay as Omaha. So the 15% annual target paid monthly at 1.25% is our target. Same team, same personalities running the strategy, same strategy.
Absolutely. So if you like Omaha, this is definitely going to appeal to you. So the three factors I saw based on your website and prospectus is you look for a high return on equity, low debt to equity ratios, and low earnings variability. So, I mean, those three factors, just on the surface, that you're going to have top quality names in this portfolio. So I think that's going to appeal to a lot of people.
Correct. So, I mean, just to broaden that a little bit and even simplify it even more, it's like, we're looking for highly profitable companies to your point. We use ROE for that, return on equity, return on assets, and we also look at EBITDA margins. So that's kind of there's three factors and there's three metrics within each factor. So in earnings variability, what we want there is stable earnings growth, right? We don't want companies that are losing money, making money. We want nice, stable earners. So we're looking at earnings per share growth in the current year, and then we're looking at it over the last 5 years as well to see the trends. On the leverage side, we want companies with low debt. I mean, of course, like as you mentioned, so we're looking at the book value of the leverage or the debt that they have on the books. And then we're looking at the market value of that debt as well, compared to their market cap. And then we're looking at debt to total assets. So we're looking at all these things to identify companies, to your point, that are, high quality, growthy companies over time. And the portfolio is very unique. It's very different than Omaha, OMA8, a completely different portfolio.
Yeah. So speaking of portfolio, let's go and talk about the top 10.